Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. I want to answer one of the biggest and most important questions that new investors have, and that is, how can I make money investing small amounts, and how should I invest if I have a small amount of money? Now, you have come to the right place to ask this question. Why is that? I am one of the few people that you will meet that is talking to you on YouTube and virtually and all these other places, email, public, all these places, that has done this, right, in terms of investing small amounts, which a lot of us can be comfortable with. But I've also invested over $140 million across my millionaire clients and even my mid-tier clients. And I can tell you right now that the exact same way that you would invest $100 billion is the same way that you would invest $100. Why is that? It is all about the process. It's all about the process and how you research and what you're looking to in the market. It does not change. If I think that Tesla is a great stock, then $100 in Tesla might make sense for me. Okay? It's about the process. So that means that if I'm a millionaire, or if I'm a $1 million client or what have you, Tesla's still a good stock for them. It doesn't matter how much you're putting into it. If it's a good company, then you might want to invest in it. So again, it is about the process, not necessarily about the dollar amount. Now, the other thing that you want to know too is that yes, you can put in small amounts. We talk about this, especially on public. Talked about fractional shares. I've done videos on fractional shares. Fractional shares can help you. They're extremely important, especially if you're looking to invest small amounts. But here is the catch. Just because you invest a small amount doesn't mean that it's going to double or triple overnight. That is not the case. I want to give you a real example here in a second. So I've been talking about Dick's Sporting Goods, said it for a while, right? And I have about $171 in Dick's Sporting Goods. Not a whole lot of money. And I'm up, let's see, in this account, I've made $21.14 as of today. And let's see what the total return is. Well, it doesn't give me a total return. It just gives me the dollar amount. So y'all can do the math there. I've made $21.14 on a $174 investment. That's decent. That's decent. That's above 10%. That's okay, right? But that is a realistic type of return. And the longer that I have it, if Dick's Sporting Goods continues to go up, then I will continue to profit from it. Tesla in this same account is up $932. I have about $1,600 invested in Tesla. How did I get to this point? Well, number one, over the past year, Tesla's up 200%. Okay, so that's number one. Number two, in Tesla, I put in for this one $20 every 2 weeks. That's it. $20 every 2 weeks. I've been doing this since the time I told y'all about Tesla and why I started to jump into it, which was Q4, fourth quarter, when they started to do the stock split and get added to the S&P 500 of last year. Okay, so I really haven't been in it that long as I wish I would have, but started with a few $100s. I think I'm gonna start with like 100, 150, and just put $20 every 2 weeks. That's all it was, and now I'm up $900 and some odd dollars. Small amounts do make a difference, but again, whether it's $1 million, Tesla, you still would have made 200% on Tesla, right? If you invested that same type of profit, because it's a percentage amount. If it's Dick's Sporting Goods, you still would have made 10% or whenever from the time that I invested. The key and why it's still important to invest small amounts is because based on that percentage, where else would you have gotten that type of return? I could have put that same $10 in the bank. I could have put $20 every 2 weeks in a savings account and made just about zero. Not exactly zero. I would have made a little bit more than zero, but right now I'm not going to make as much. Yes, you still want to have your safety, right? Like I got my emergency savings in case something happens. I can pay the mortgage. I can do what I need to do and let my investments continue to grow. But again, the exact same process that you use to invest $1 million is the same that you would use to invest 100. That's it. You don't want to take any more risk. Like, oh, it's just $20. I'm just throw it at a company. No, you don't want to do that, because when you have 100, you're going to do the exact same thing, and you're not going to properly weigh how you should invest. Another thing that people do is say, oh, well, it's just $20, throw it at something. Oh, it's just another $20, throw it at something. It's just another $20, throw it at something. Then you wasted $60 when you could have just said, I'll take the 60, I'll do my research, I'll look into a company, I'll get an index fund, and just let it roll and continue to invest that way. you could do that, right? But when you just constantly only think of small numbers, I don't really care about it, that's not going to work for you. Or if you are someone say, I only have a little bit, I only have 100, how would you invest that? I only have 100, I only have 20. I need to put it somewhere where I think it is going to grow. What is going to give me the best chance for growth? Great question. We actually did a video. I gave you like 5 or 6 stocks. It was earlier this year of places I like to invest if I'm new, if I don't have that much money. But the key here is, even if it's a small amount, you still, I repeat, you still need to give those investments time. It's not going to be an overnight thing. One example, or one place I'd like to go to, index funds. You can say VTI was the Vanguard Total Stock Market Index Fund. It's a great place for long-term investments. If you got time, you want to put the $20 there and continue investing, which is what I always suggest. Always continue to add if it is quality, and that ETF is quality. We all know this, right? That's one place you can go. Just continue investing, continue investing, continue investing. Those small amounts, $10 a week, $10 a week, $10 a week, whatever it is, does start to build and compound. You get that first 100, that first 100 slowly becomes 500. Then that 500 slowly becomes 1,000, and you see where this process goes. When I started investing in Tesla, I didn't start out with a whole lot. I still am not putting in a whole lot. I'm just like, hey, look, I like it. I'll put in $20 every week. A year later, I have an extra $1,000, $923 to be exact. But you guys get the point. Small amounts do matter. And again, the process stays the same. So when I tell y'all that I sit here, I invest, I hold it for 6 months, come back, reevaluate, exact same thing. One of the reasons why I do that is because when we were sitting down meeting with our clients, we met with them. Usually the most we would meet is about 4 times a year, but it was mandatory to meet with them at least once a year in the year, get their taxes right, sit down, decide what they wanted to do. But some, and most rather, come in 4 times a year. That's quarterly. We say, hey, look, this is what's going on in the market. Here's what you're investing in. Here's what you're investing in. Here are some things I would suggest, or we're just leaving it alone. I'll see you guys next quarter. Or we would do this over the phone. Because I've done it, that's why we do it here. That's why I teach it here, right? I don't do anything that I didn't do for them, that I don't do for myself, what I don't do for my kids, I don't do on this channel, right? Everything goes the same. My kids don't have a whole lot of money, right? They're kids. They're 3 and 1. But again, how they invest and how I choose investments for them is the exact same way I do it for myself. It's the exact same way I do it for my students, and the exact same way I do for my millionaire clients. So again, the process is the same. You got to figure out what your process is though. I got mine. Okay, I got mine. We talked about it on the channel. I teach it in the course. So mine is, I look for quality companies, right? I look for companies that have momentum, meaning it is moving faster than the overall market, and it has done so for an amount of time. I like to see 6 months. A year is even better for me. Okay, I also look for, what type of products are you selling? What is the company doing? Do they have what I call a company stack? Meaning, if you have different products, different ways to pull in revenue that build on top of each other. Apple is a great example. Yes, they sell an iPhone, but the iPhone connects to the Mac. And the Mac also has, you got Apple TV, right? Then you got the streaming service. And then you got Beats headphones. You see, I'm saying I'm stacking all of these things together. That's what makes Apple a really strong company. So these are just some of the things that I look to. Did a video on all the things I look for as well. So feel free to look at that. But again, that's how you invest small amounts, the exact same you invest large amounts. It all goes together, but the key is quality and time. You still have to allow it to grow. Just because you put in $25 into something does not mean it's going to shoot up overnight. Okay, Tesla is up 200% over the past year. It is not up 200% from yesterday. Okay, that's not really realistic. Okay, you do want to do all those things, have those quality investments, allowed to have time, and if you can afford to do so, put in $5 a week, put in $10 a month, whatever you can afford. Allow that to continue to build and build up on that position, because a one-time investment, $20 is not going to change your life. It's not. That's just not how this works, right? I told y'all my story. I think I told you my story. When I first started investing, I could only afford, as a teacher in Dallas, Texas, I could only afford $100 a month. That's all I could do. Now I've got over $150,000 invested, and it's continuing to grow. That's because I started off with what I had. That's all I had, and it grew just a little bit. Got a better job, put in more money. Got a better job, put in more money, and allowed that money to continue to grow over the past, 9, almost 10 years. That's how it works, and it's why I've said this before. I'll put the free link to the class as well. Why I've said that 100,000 is your biggest and best financial number, because that's when that compounding interest really kicks off. But you will not get to that first million. You will not get to that first 100,000 if you do not invest that first 10. If you don't invest that first 100. All right, so that is how it works. Feel free to peruse the channel because I have more videos on top 5 or 10 stocks for new investors, how I would invest $100, all that stuff already on the channel. Feel free to check those out as well. All right, that is it for me. I'll talk to you guys later.